Hey, what's up, guys? This is going to be a quick recap from a couple trades that I took today. Haven't done these in a while, so bear with me. I think I took PACW, a few intraday ones, but just want to review them and just kind of go through my general thought process. I know I took a lot of these on live trading today, so you guys do hear my thoughts, while we're going through it, but I wanted to show the charts, and just in case I missed anything or any of you guys missed it, you'll have something that you can review and just kind of reflect back on along with, the charts itself right in front of us. So let's go ahead and get started. The first one here, if you guys want to take a look at the Discord here, was PACW, right? Let's go ahead and jump to the chart really quickly. I think I ended up looking at it right before close. Yeah, so it was right before close here. And I like the hourly structure. I think this was the first focal point that I was looking at, right? I was looking at the hourly coming down into this 9 EMA here. You guys can clearly see the low volume. And if you guys don't know, PACW, regional bank, they've been beaten down, obviously for good reason, but I think it's seen a lot of its downside already happen. We're going to start seeing recovery and some buyers step in and just seller exhaustion overall. So I have been looking at like KRE, PACW, WAL, a few of these names just for signs of exhaustion. And I think we saw it here on PACW, right? This hourly, and I'll tie it into the daily so it'll make a little bit more sense. But this is what I initially saw, right, along with the daily setup. And I was targeting the 9 psych level, right, kind of like that 897, this previous resistance where it ended up breaking down. You guys can clearly see it retested here and then sold off. And obviously we got another push up into this range right here, sold off again, but you guys can see we're making higher lows. And this is where I really caught interest, right? It was where we held this level here. You guys can see there really wasn't any candle closes below. We did break under, but we saw a very, very quick push back up to that level. And the spread was tiny, right? There was not a lot of sell pressure. You guys can see that from the volume and the spread. And then finally we got a high volume break, which gapped us over this level and held, right? And then we had another sell candle, low volume, and we were just holding right here along with the EMAs as well. So it looked not like a flag necessarily, but it was a nice regain of a key level, right? The 685, where a lot of candles that were in sense bullish couldn't get over, and the spread had diminished very, very heavily. And we finally got a big expansion of price and volume, and it looked really good, honestly, for that $9 push to get back to this previous support. So I ended up jumping in here like 45 cents, and this is essentially how it happened, right? So let's go ahead and jump into it really quickly. I think it was under this one. There we go. Boom, there I am. Cool, cool. Alrighty, so let's go to the hourly here. So if you guys wanted to look at what I saw, right? I already kind of gave you a little bit of a glimpse on it. It was right here. This hourly, as you guys can see, started to pull down on low volume. But if you guys want to take a look, why was I looking at that hourly in that specific circumstance? Obviously, you guys aren't going to be able to answer, but our best trades need to come from previous resistance now acting as support, okay? You guys can clearly see, right, it had previously tested this range, sold off. We had a nice resistance here in after hours, and then it ended up pushing that same spot, right? So we were looking for this hourly spot right here. Let's see if I can grab this little guy to act as support, okay? Now how do we understand that this is a resistance, right? We can see that clearly from these defined wicks here. No candle really was able to push and control over this level. You guys could just draw like a horizontal line, as always. Oh, my things are all gonna be white, right? It doesn't really matter where you put it. You can put it at the top of the wicks. You can do it where a lot of them were actually hitting. But regardless, right, I just decided to do a nice little zone from the top of the wicks down to the bodies. And this was just a quick one right now, but this is what I noticed right off the bat. You had a very, very strong volume candle finally break through this resistance, and then you had a low volume sell-off back into previous resistance now acting as support, or at least the opportunity to act as support, right? And then it's really up to bulls or whatever side you're on to then step in, take control of that, and then you should get that short cover or some kind of oomph from the other side that helps lift off the buyers in that range. So off this 776 or just this box, this is what I was really focused on. And if we pull up our EMAs as well, right, a nice pullback slash flag into this 9 EMA. So this was a very, very key and A+ setup in my opinion. Ended up working up really well. We ended up getting a pretty good fill at 4.5. I think on this dip right here, they came as low as like 40. I'm not too sure on the exact fill that this could have gone to, but it was very satisfied with my fill, right? And I really would have risked the bottom of these bodies here, right? Or I guess the closes of these candles here for my risk. That would have lined up pretty nicely, if you guys can see, with the 21 EMA. So that's where this trade idea stemmed from. Now I brought up too that the daily, if we pull this up, we were looking for that resistance touch, okay? So if you guys can see too, there was actually a small gap. Let's go here and here. Sorry, I haven't traded on or charted on TradingView in a while. Getting used to all the hotkeys again. Very small gap. Like that thing is tiny. But regardless, it's still a gap fill that needs to be filled. We'll just grab it from here. Right, so this was our target. Let's just go ahead and fill this out in like black. That's what I was looking for, and it lined up perfectly with this $9 level right here. Remember, this was a previous support. How do we know it's previous support? We can always use our wicks to gauge, right? After this big sell-off, what's the first spot that caught, right? Obviously, it flushed through here, but it pretty consistently had wicks from the downside hitting this $9 level, bounced, sold off, bounced. And you guys can see multiple times that it ended up breaking down, hitting this level. Of course, it was still bearish. We were trading under the EMAs, and it came off, that nasty news sell-off from regional banks. But still, 9 was a big psych level and a big level overall that bulls were trying to hold. And this was a perfect opportunity to target the gap and then the support. Now, this is what we obviously know now. We had a huge volume day, at least relatively speaking, right? A lot of these other days were pretty low volume. We had this push down on low volume. We had this breakout on high volume, which is what caught my interest. But now this is exactly what you want to see, right? This high volume that pushed it into this gap. Now, today was a pretty easy day, I would say, if we end up just going to the chart itself. Just turn off our EMAs really quickly, right? It was pretty easy because this is where we ended up catching a majority of our move, right? We caught it like right around here. And what ended up happening is you just have to let the overnight session do its thing. You have to have some confidence in the fact that this was a higher volume or lower volume move on the hourly, and just trust, the fact that buyers have a really good risk reward opportunity with this resistance now becoming support, right? This is always something that you have to be cognitive of whenever you're looking to swing trade. I was prepared for this to, potentially fail underneath and then gap back under this hourly level, and I was actually preparing to lose on this trade somewhere right around here, right? And like that was max threshold for my loss would have been like 736, somewhere around maybe like the low a day from the open. So something to always take into account for. Remember, that's why I don't size super heavy on my swings. I like to go pretty light size. Most of the times I'll take like 5 to 8 contracts. I try not to go anything over $500, right? I just try to play it safe that way. And that's why I don't swing that much, right? I don't take huge risks overnight. I only do it if it's like a very high quality setup and something that I think can give me at least a 5R, right? So I'm risking $100 to make 500. Now, that's not what I risked for this circumstance, but I definitely thought, getting our contracts from here, 776 as that low, right? Obviously, I got it at like 45 cents, but I at least was hoping for this to get a nice move back up to like $100 a contract, which we did, right? And that's when I got my full cut. So really good RR trade, not only from like a chart perspective, but from an option standpoint as well, right? We ended up getting 100% on this trade, which I'll take anytime, right? So we ended up getting this gap up in extended hours. Pre-market, we had a pre-market high sitting like right around here. Right, we had like I think that's what I was talking about, like 850 was the spot we wanted to break. So with that in mind, right, pre-market high was something that we wanted to break through. I ended up, the market ended up opening. We had this initial sell-off, and then I think within this first candle here, I took off like half, if I'm not wrong. If we can just jump into the Discord really quickly. PACW. Yeah, so I ended up taking some profits right around here. Yeah, 80 bucks. So really good win right there already. We were over 60, 70%. I got down to my runners, right? Because 850, I was only looking for $9. I wanted to hit the back half of that with stuff that I was willing to lose. So it really wasn't that big of a deal if it ended up breaking back down through that gap to the entry price. And then this is the next trade I'll go over here in a second. But yeah, I mean, obviously you guys can see with this, we ended up pushing up to 90 cents. And then I got these filled at that 90 portion. Wanted to hold the last amount for that $9 mark. And then there it was, 120 peak. I got a little bit higher. I think these actually pushed to 1.5, but I ended up selling right at target. But what I want you guys to note here really quickly is on this actual chart, right, as we broke through 850, that pre-market high, what did volume do? This is always important that we take a look at and kind of, when you're in that trade, you're going to freak out sometimes, like, oh my God, okay, this is ripping, this is breaking our level. It's good to scale into strength, but it's also important to let that candle finish and see what the volume is doing. So if we take a look on this 15-minute candle, that's some of the highest volume of the day. That's higher than the 15-minute open, which usually your 15, 30-minute open is always going to be the highest volume of the day. But this ended up breaking through very cleanly. Look how strong this candle is as well, right? We can always tell the strength of a candle by not only the volume, but how the wicks look relative to the body, right? Very small wick, very strong body, and it closed really nicely, right? And this next one opened right on the same spot, and it pushed through, sold off a little bit, but look where the sell-offs are coming, right? They all pull back for at least 45 minutes, right? It pulls back, holds 848, right? Or 850, we'll just call it and round up. Holds that same level for 45 minutes, guys. And that's a true sign of strength. That's a valid breakout, and it's a valid pullback, right, and hold of this 850 level. Of course, these are some higher volume sell-offs here. This one, we'll kind of ignore this one. But you guys see this red candle or this black one? Pretty high volume, right? And that would scare most people out. But that's why it's important to let your candles close and stay calm in a position. That's why I really didn't freak out, as this was happening. I was just letting this play out. I was looking at PDD. That's why it's important, too, that if you are trying to protect those gains, you can set a trail stop a little bit below wherever you can figure this is out. That's why the options chart's really helpful because, 848, we don't know what that's going to be on the options contract, right? However, if we use the options contract and we kind of line this up with where these lows are at, we can pull it slightly below, not get stopped out, and still be comfortable, right? Because we did take our entry down here. So really, really easy read on this too, with it not breaking below. It pops out, right? Gets a nice higher high, pulls back down. We have what? A higher low, right? We can always use our trend lines. It's not going to be perfect. Had we done like this, right, it would have broken underneath. But if you guys take a look, right, it's still within, obviously, we're making higher lows. But if you guys use your EMAs, which I always recommend we do, never broke the 9 EMA, right? You can just simply readjust this trend line if you need to, right? It's not that big of a deal. Trend lines are helpful, but I don't always use them because some people, they might freak out with that, right? Because if you're going from 1, 2, right, this one technically broke it. But if you're using your 9 EMA on the 5 or the 15 or whatever it may be, you're still in a safe trade, right? And you're up so much of a percent. There's no point of freaking out on this. Still, I would keep risk here and really try to let this ride to target, which is what we did, right? I mean, this ended up pulling back down on low volume. You guys can see right here how these kind of align. Sold off on low volume, higher low, breaks out on another huge volume candle. Obviously, this engulfed the entirety of these and pushed right into target. So gap was filled. What ended up happening, right? It pushed through, made a higher high, pulled down, another higher low, and it actually filled the gap and held the gap right here, which is very good to see. And it pushed back up for what we like to see, or what we call kind of like a double top. Remains to be seen if it sells off at this level, but that is a perfect example, right, of a target-to-target trade. And it all stemmed from what everybody should have, in your playbook. This should be your number one thing that you look for is old resistance becoming new support. And if we ever go for another trade, right, and we're looking for a short side trade, old support becoming newfound resistance. This is a staple in everybody's trading. It comes down to patience, waiting for these levels to be consolidated above or pulled back onto with low volume. and really just be willing to risk that trade, right? These are going to be some of your best trades, and it's so simple, right? And making sure that you're patient enough to let things play out on the higher time frames, very important. So that was pretty much the entire trade, right? I mean, I think I cut right around here as we got into the $9 level. Sure, I missed out on some profits. I think a couple people ended up getting the full move. That's fine, right? Everybody has their own risk tolerance. Everybody, you know, you can hold whatever you want, right? Things can go further than your targets, and that's what runners are there for. But if you're comfortable taking, from one target to another one, there's no shame in cutting at that target. So very easy trade. It stemmed from the daily, like I said. Very simple chart to kind of trade here. And we went literally from this target here based on this 2-bar kind of pattern with high volume on the breakthrough of this previous resistance, right? And then taking that from that level to this, right, the $9 spot, and simply looking for, well, like I said earlier, that old resistance becoming new support found on the hourly chart. So super cool trade here. Probably one of my favorite swings I've taken in the past, like, I would say week. I took I think it was last week or 2 weeks ago. I took one on Shop, and I think Upstart was another one. But this was a very clean chart, very clean read. So study up on this, guys. I think this is a really good example of, like I said, that target to target trade, old resistance becoming new support. And I don't think a lot of people took this one. I think this was a low key one, which actually kind of made me upset because this was a pretty easy win. But definitely add this to the the archives because you will see this again. So let's go ahead and jump into the next one. I think it was PDD. It was supposed to be a swing. I really like the options contract for next week for it to give it a little bit of time to play out and ferment. Unfortunately, we ended up getting like a 35-40% win, and then it broke back down to entry. So let's go ahead and review that real quick. PDD, guys, Chinese stocks on fire, right? So this was the day before. I'm in a little bit of a rewind mode. This was the day that I ended up charting this. You guys can see earnings. This was a huge move up, right? We had a big move from 61, right around that range, all the way up to this 71, 61. Volume was a nice sell-off here on low volume. So instantly need to be looking for levels that it can bounce off of, how we can go long on this name. Right, this pushed right back down almost into the gap fill. But this is where we ended up seeing a lot of strength come through on this candle here. You can see the volume pushing down, lower, and finally you get a big range candle on high volume. So you need to be looking to potentially go long on this and where this could pull back down to so you can continue back long. So I ended up charting this right around this level here. I think it was right here. Yeah, it was like 71.42, something in that range, right? Because we can clearly see candle close. This is the seller's, open here. So I wanted to use the, the close from this day, the open, of course, and just kind of use a general area for a spot that we can look for a pullback to go long on, right? Because remember, this closed right here. So ideally, what you're thinking it's going to do before it actually ends up happening is maybe a pull down. Oh, this is in white. Damn you. Sorry, guys. I'm trying to make this black. There we go. This is an epic fail. It's still white. There we go. I did it. Okay, so pull back, hold, and go, right? And then this would have been like a target-to-target trade like that. Obviously, it's not going to go in full mode like that. It's going to probably come down, push up, pull back down, hold that high day. And that's how charts go, right? It's always going to be a push, break, and that's how impulsive waves move. It gives market's pretty fair. It gives people the opportunity to get out, break even, or for a small loss, especially when you have sellers doubling down to try to get it down to a level. Just think that the market does move in waves like that. And for a valid move to happen, retests need to happen. We had a big breakout here on high volume. Logically, you need to think, hey, okay, this is going to pull down to a specific level, a previous spot where, buyers couldn't get it over. It was very apparent they couldn't get it over this initially. So this only makes sense for it to pull back down and then go. So that was my initial thought. Now, let's go ahead and, how do I do this? Let's go here. Let's go ahead and hit play. We can unveil what happened. Oh crap. There we go. Okay, so let's get out of the replay mode now. This is what the candle ended up looking like today, right? Yeah. Okay, so did exactly what we wanted. You guys can see lower wick here. What did it end up doing? Pulled back down. It was slowly broke under, and that is actually what we like to call a red to green move, right? So the close was here. Anything that ends up pushing underneath this open, or I'm sorry, this close on this previous day is technically called, it's going to be red. It's not called, but it's a red move where the stock itself is now down in percentage, and we were looking for it to come down, test 71.42 or somewhere maybe under, a little bit under that level, and look for strength or volume or something to pick it back up, whether it's a reversal candle, that volume that signifies it, something where it ends up pushing back above and holds over 71.42. That's literally what we got. So if we go reset chart, okay, what ended up happening, I think it was a 5. This is where we're going to have to tie into the Discord really quickly, because I think it was this candle here that's what really sold me on it. Let's jump into the Discord. So PDD, I ended up taking this at 649. Okay, so I was a little bit late, and I think that's because I was in PACW. So yeah, I took it at 649. If you guys can see, initial entry right here. Entered PDD, 616, $75 call. Went up pretty nicely on this trade. Maxed out. If you guys want to just cheat, we can see what we got. If you guys were in this trade, you guys know. We pushed like 30, 35%. And then I ended up getting stopped out right around break even. I think I said that on live, so hopefully nobody held that deep. I mean, I think you're still good. It pushed, should still be green on that trade actually. But now if we go back to the chart itself, right here this is what I was looking for, guys. You end up getting that red move, right? So clearly we're under the close here, of course. But what we end up having is this initial wick that pulls this down. That's why it's important to get off your one. One could have definitely have gotten me a better entry if I was more attentive to this, but this could take your eyes off of it. If you're just on a 1 minute and you see a sell-off that comes with this velocity and how quickly it goes under, you're gonna be like, okay, screw that. It broke under my level. Let's go look at something else. Let's look at SPY. Let's, because we got to get rid of that instant gratification and be willing to wait for our higher time frame, candles to set up. So this ended up breaking under our level. Clearly, the stock is now red. It breaks under the level. It's hard sometimes to be patient for this. I ended up, if we just go back to the 1 minute really quickly, because I took it at, what time did I say? I think I took it at 6:49. Yeah, 6:49 my time. So let's see when I got in on a 1 minute time frame. So I got in like right around here or somewhere right around here, which I don't like the entry, if I'm being honest. I should have definitely have gotten in as it pulled back to this level here. And sometimes it happens to the best of us, right? And this is what I should have been looking for, as a pullback somewhere into this high of day range or this previous resistance at the open. That's what I would have liked to have seen. Let's see how it looks on a 5 minute, but still, I mean, I definitely knew what we were looking for on this trade, so I think that's why I took it, just to get it started. But yeah, you guys can see push down, push down. This isn't the highest volume 5 minute hammer, but nonetheless, it is a 5 minute hammer, and it's an opportunity for buyers to hold that level that we were talking about and at least show other buyers like, hey, someone big here is willing to defend this and at least pull price back up off of a key spot. And then you have other buyers that will jump in on candles like this, a la me, right? And that's how these things work. But you had this breakdown hammer. I wish volume was a little higher, but it ended up, typically if you were going to take this is what's called a candle by candle. So let's say you ended up taking this, as soon as you see this 5 minute hammer close, what you can do is just risk this right here, right? And then, or you can, if you want to be a little more, I guess aggressive in terms of how much you're willing to risk, you could have taken this right here and just risk the low. So 70.95 would have been your stop loss. Or if you want to be a little more risk adverse, you could have gone right here, okay, which is the very, the bottom of this little hammer here. So let's see here. What did this end up going to? 71.46. That was the, yeah, literally the open for the next candle. So once it ended up pushing up, of course, if you didn't catch this, what you want to try to do is wait for a pullback or something, either into your EMAs or previous resistance. That's always the best practice. I showed you guys, I definitely took this at a wrong time. It was still worked out. I definitely could have gotten a better entry though. But going to a 1 minute, right, this is your pullback right here. Boom. Because you guys saw on the 5 minute, it didn't really give you an opportunity, and that will happen. But if you go to the 1, this ended up pulling back down into your 1 minute EMAs. I don't really like to trade like that all the time, but sometimes it's necessary to do it to join in on a trend. You know, it's not always going to work, which is why you want to look for a confluence, which we did have here. This high day range, break out, pull back down, and held your EMA, and then also held that, you know, that high day range. But very, very beautiful red to green move, and it did exactly what we wanted. It slightly broke under our level, but was something that, you know, we prepped for and something that we ended up executing, I would say, fairly well on. The one thing I would change is that entry. But as it breaks out, you know, you guys can see here on this candle, clear low volume. So a lot of this low volume came from this attempted sell-off from this massive candle here. And what ended up happening is it got pulled down. I think this might have been actually the entry right here, but it pulled down. And, you know, if you see this on a 5 minute, that is your go-to sign to either take that or risk that, you know, wherever the low of that candle was. We know here it was that previous high. But you guys can see that low volume, it didn't come from the hammer and the weakness of bulls. Bulls already proved themselves with this range on this candle. The weakness came from the sell-off, right? And I'm sure this candle probably got pushed up near the end of that 5 minute close. So this would have been another great opportunity to add to this. But for, you know, from our entry, really just got pushed all the way up to about 73.93. As we can see, I wish I got a little bit more out of this move. I felt like I scaled pretty well, but this is what ultimately ended up stopping me out. We had this head and shoulders set up. You can consider this a lower high as well. It's pretty close. Yeah, it's pretty close, but definitely a head and shoulders, right? This volume right here, you guys can see it was pretty diminished. You had a 1 for the high volume sell-off, the secondary candle. It's pretty good volume here, and you had an opportunity for this. If it increased on volume, would have invalidated the head and shoulders, and it probably would have gone for a new high. But you guys can see, look how weak this candle is. Some of the lowest volume of the day. That's going to sell off every time, and that's what validates that head and shoulders. And then you had this nasty sell-off, and this is where it stopped me out because it obviously pushed down. Like I said, I think I caught it somewhere in this range here, somewhere in this spot. So that's what stopped me out on the rest of that trade. But had that not happened, I think we could have gotten another higher high. And really, I was expecting for this name to push up into this spot here, right? Somewhere where these candles had closed previously. I was looking for here. And then I was ideally looking for it to test the top of this range. You guys can see this had been a previous support. Ended up being a spot of consolidation. There's been a couple sell-offs through this level, but the big indicator was the sell-off and the ultimate retest of it. So I was hoping for like 76 to 78 had we gotten a nice little breakout. Obviously this would have taken a little bit of time, which is why I try to grab an extra week on those contracts. But still, I mean, it's still a very, very valid, you know, close on the daily. I don't think this setup is necessarily done yet. I just think it's going to need a little bit of time to simmer here and maybe consolidate over that key resistance that we were talking about, which is now support here at like 72.5. But pretty easy trade. I wish it would have, you know, done a little bit better in terms of how much it pushed out. But I'm still not upset with that trade at all. You know, I know a lot of people definitely still work and trade from their phone, so this would have been a fantastic setup to just overnight and kind of hold. But we'll see if it's on the menu again for tomorrow or going into the end of the week, because I don't think Chinese names are done. But very clean setup. Hopefully you guys understood why we took that. Understanding, you know, the red to green move, that happens a lot, especially with the fake, you know, trap underneath that level we were watching on the daily, and just waiting for those candles to close. Remember that 5 minute really gave confirmation that, hey, buyers are trying to hold this. Once you see that, remember, it's called the candle by candle basis. You guys can just risk the close of the previous one or the open or wherever you feel comfortable with, or you can simply risk the low of that candle and take that trade, right? And especially once you have confirmation of the candle close, which we know is a hammer, and we know that the volume was pretty high as well. So those are always good confluences, and it came off of a very key level as well. So pretty solid trade here. Let's go ahead and jump into a few more. I think I ended up taking Tesla today, and then Unity was another big one. So we'll have 4 total. Let's go ahead and jump into the rest. Okay, so let's go ahead and do Unity as well. This was a very simple, essentially it was a gap fill, right, and then a protection of the gap once it ends up filling. Pretty basic trade. You guys will see this a lot from both sides, from a bearish and a bullish perspective. This happened to be a bullish perspective, so let's go ahead and just chart it live. You guys should be able to see exactly what I'm talking about. So top of the gap right there, bottom of the gap right there. Excuse me if you guys heard that. Just go ahead and just control this. Boom. Right, and this is the basic function of what we were looking for, right? So this candle right here, this massive green one, broke and filled the gap. Then you had a low volume pullback into that gap, and ideally, right, from like a mitigation standpoint, you want to see buyers at least control the midway point, and you guys can do this with your fibs. So Alt F, you guys can go here, pull it from low to high, right? And then let's see, I don't know why I only have the 382. Let's make this blue. Just make it all nice and blue. I don't really care about that. So you want to at least see them hold the 618 to the 0.5, right? And that would be a mitigation and a control of that very massive range candle. They want to at least hold the midway point, and you guys hear me say the equilibrium a lot. The 618 and the 0.5 align really nicely with this gap fill, right? And just thinking about it, if you get a huge move through and fill a gap, buyers want to try to control the midway point, or at least control the gap. It's a huge area of, not a ton of volume. So if you can at least fill that volume in that area with a ton of bids, you can at least control a good amount of the gains that you just made on this. That's a huge win, from a bull perspective. So we were looking for the 618 to the 0.5 to at least hold for a nice bounce trade on. So just knowing that, let's go ahead and jump into the 15, because once again, let's just reiterate, we were looking for 35.27 to hold. That was the main spot that I was concerned with. So off the open today, what did we see happen? Right, we had a overnight push up. Let's actually make this a little bit, I wish this was a little bit different. Opacity maybe? Yeah, that's better. Okay, there we go. So remember the gaps here, we were trading in it. We were looking for, remember we were looking for like this in the morning. Oh my gosh, why is it not cooperating with me? There we go. We were looking for something like that yesterday, and then I go to fill this spot right here. This is an imbalance candle. Very easily and very easy to spot this imbalance candle. A lot of range cover in a short amount of time on very high volume. That's typically going to get filled in an intraday session. It's not necessarily going to happen overnight like we see, with like gap fills to the upside or the downside. So what we were looking for was this, right? Break down, hold over the top of this gap, and then go. That was our focus number 1, but it didn't happen. We were sitting there for like 2 hours, an hour and a half, or whatever it was yesterday, waiting for this one trade to happen. I think this is actually when I started PACW. But take a look, right? Extended hours, going into pre-market, we ended up getting a nice push up. And then in the morning, what does it end up doing? Right? This ends up breaking above our level. We want to see it pull back. Instantly, that 5-minute candle, you guys notice it didn't close, it closed right on that level, right? Open, close, closed right on this, and then the next candle opened and pushed out, and then it continued higher. So this was a picture perfect setup for what we were looking for. A protection of the gap, close and hold the upside of that gap, or maybe if it sold off a little bit lower, hold the bottom end of that gap, which it ended up doing right here. So this is why this bounced in this area a little bit later in the day. But we were looking for this first section here, because this was a very good opportunity to get that imbalance fill. And what did it end up doing? Literally did just that, guys. Filled the imbalance. Let's go ahead and just pull this here. It did that and then some. So I mean, if we pull it even there, it got a few extra, what is that, an extra $1 or so off of that level. So imbalance fill, hold of the top of the gap here. We'll ignore this, but it did end up touching the bottom of the gap as well and defended that pretty well before it ultimately ended up selling off. But we got a very nice trade of what we were looking for. And you guys remember, every morning, what has the highest volume? It's usually that first 5 to 15 minutes, and look what ended up happening. Look at the volume here. This is not very high. This is 800,000. Typically in that morning 5-minute candle, you'll see a ton more volume than that. So this volume was pretty low volume for a sell-off, and it held above our level. We ended up taking the trade as soon as I saw this candle close, and I told everybody I was just risking the low here. Right? If I risk the low here and I take the loss, and I can look for another entry down here if I wanted to, but took it right here, risk the low. What is that? It's about 25 cents of risk. Not bad at all. I mean, it was a perfect setup. We ended up getting, like, I don't remember the fills that I got, but ended up taking it from here, right, 36.45, and I think I ended up taking it all the way up, if I'm not wrong. Let's just say I took it to 38. I mean, that's a $2 move on very high volume. Look at the volume, compared from the opening sell-off to the, the opening rip that ended up pushing it through the imbalance fill here. Very, very high volume. So naturally, you're going to get an IV increase, you're going to get a Vega increase, and those contracts are going to spike like crazy. And that's why, from our entry, we ended up going like 70-80% in just a matter of a couple minutes, right? So very easy trade here. I don't think there's too much to review. Once again, right? I mean, anytime you get a big move like this, a huge move, typically you're going to see a sell-off kind of happen. But once you see that sell-off occur like this on lower volume and decreasing volume, it's a good chance for you guys to look for areas to try to get in, areas of old resistance, right, that can now be potential support. This one was very easy because we had this gap fill, but there's plenty more opportunities. If this continues to sell off, our next spot that we should all be looking for, right, would be somewhere right around here. Okay, let's say it breaks the 618. If we take it from this candle, we obviously saw it's just slightly below this, but we'd be looking for this 32.90 to now act as support because it was a pretty big resistance. We've seen it here as support, support here, or I guess it was resistance, then support, resistance, resistance. So this would be a big spot to look for in the future, and they would still be protecting a little bit of what's left over from this big gap up, right? I mean, they'd be protecting about that much of price action. So something to look forward to going in the future, but this was a very, very, planned out trade that I feel pretty satisfied with. I know a couple people said it happened really quickly. I agree, right? I mean, this pullback happened within the first 5 minutes. So if you guys weren't here for the open and on live, you guys definitely missed this one. But it was one of the bigger trades of the day. Like I said, went about 60-70%. But like, look at that. I mean, very easy pullback on the one. Clearly held above. Wicked under just a tiny bit. But you guys can see that the spread, right, is getting tighter. Right, that you guys can see here, these candles were a lot bigger, obviously, and then the spread gets very tight on the one, breaks out, pulls back for a higher low, and then goes. I mean, that's just from a 1 minute perspective. I don't trade on the one very often. So from a 5, right, this candle ever so slightly closed below. It was close enough for me at my level. I'm willing to risk and lose below 36.20. Can't emphasize that enough. You got to be okay losing, and if it does break below this level, you take the loss. I mean, it's 25 cents on the underlying. It's not that big of a loss, I assume, during the options. But I love that risk reward trade. It was something that we were looking for, and got a nice win off of that one. So that would be Unity. We're going to be looking at this name a little bit more in the future as well. So just have it charted out. But yeah, hopefully everyone caught that. Let's go ahead and jump into the next one. We'll look at Tesla. I took this off the open as well, and then we'll go from there. Okay, so last one here, this was Tesla. I think this was literally the first play of the day, another live trade that we ended up taking, but this was a pretty basic one. If we just jump out to the daily here, I mean, pretty overextended chart. I was expecting some pullback, especially since we had broken this level here. This was a pretty big spot. Let's see where it was. So this was the previous resistance here, which we had already broken, right? But then if you get another little chart here, we pull it. I was looking for kind of like right around, it was right around here. Yeah, so we had our clear wicks here. No candle really closed above this from a bullish perspective. Was a nice simple spot. This is where I actually have Tesla kind of going in short term, just not yet. Either have it going there or potentially right here to like 237. ultimate target for Tesla, if you guys want to know. I gave a little hint on this on live today. I do think Tesla pushes 257, or if we just extend this a little bit further, you guys can see a gap here, very apparent, from 257 to 262. I do think Tesla goes there, just not yet. But yeah, I mean, this volume here, I mean, this candle kind of gave me a little bit of an indication that sellers might get exhausted with that doji here at this resistance. Of course, it ended up breaking out and held above. But I was looking, didn't mean to do that. I was looking at this spot here to be a potential resistance. I thought like 233 to 237 would be a very, good spot to go short on. I was looking for something in that range, maybe just some exhaustion from a 15-minute or an hourly later in the day if Tesla kept grinding up to go short on it. But you guys heard me talk about this. I know a couple other people brought this up as well. I don't always use these, but this is a clear dark pull print right here. These are, I don't want to say I always go and play off of these, but I do keep it in the back of my mind because a big player is looking to get filled, likely to the side wherever it kind of gravitates towards to, right? So this obviously was to the downside. Target would have been, I don't know what this was. I think it was like 237 or something like that. Yeah, 223.76. So this was a dark pull print or an order block just waiting to get filled down here. It's, whether it remains to be seen whether they want to go long or, that they're waiting to sell down there. Who knows? But that was a clear spot, and how you can differentiate them is by these long wicks, right? It's not necessarily this candle here. It's this candle here, and you guys will see these a lot. So, this coming down with that huge wick, usually it has a small amount of volume. I want to say it's like 50,000 to 100,000, but it's what it shows up on TradingView. You guys can see this on SPY a lot. If we go to extended hours on SPY, there's been some crazy ones. Like I said, I don't always use it. Like, this one was clearly one, up to 419, right? Next day, pushes all the way to 419, it hits it and rejects off, right? It kind of has a higher low. I don't want to go on too much of a tangent here. This one right here, another big one. This one's a little bit weird though, like it didn't have that long wick, but really lined up volume-wise. Sold off right into that level. You guys can see, went all the way down to like 420, held in that level. Where else? There's so many. This one here, clear one, sold off right into that level, kind of held and consolidated there all day. So, it's stuff I will take a look at. Like I said, I don't trade off of it, but I was looking for a reason to go short on Tesla as we were nearing that like daily/weekly resistance. I was looking for any signs of exhaustion. I saw the print here, and right off the open, right? I mean, we had our pre-market, I think it was pre-market high. Let's go here real quick. Go to a 5. I think it was a 15 I was actually looking at it on. I don't know if it was a 5 or a 15. Either way, yeah, it was initially this first 10 minutes, right? So I was looking here. Pre-market high, we ended up opening up, we ended up pushing into this level. It hit and it rejected, right? And then it pushed right back up. And the second time it ended up doing this, right, I ended up taking it short right here and just risked the high. So this is literally why I took this trade. You had your initial shot here, didn't break above pre-market high, hit it again. And initially I took this as a sign of potential weakness or potential exhaustion, especially after the fact that Tesla, I don't even know how many days it's been, guys, of how many green days where it's consistently sold off, rallied off of the lows with the V-shaped recovery, then gapped up the next day. It's just been nonstop, and we're pretty close to that resistance. So initially I took this as a sign, not of weakness, but obviously a weakness off this pre-market high, but potential exhaustion that I was looking for. So I did take it on the second touch here. I thought it was a really good RR trade, just risking that pre-market high. I think I'd said on live too, I was just risking high a day. And of course it sold off from 228.91, so 229, all the way down to this 226 area. I thought we get a little bit more juice here, but how I could have traded this a little bit better, and I know people were, I was talking about it all day. I want to go short on Tesla. I want to go short on Tesla. you're never going to time something like this, right? You can take this, very clear sign of rejection and weakness off of this pre-market high, but you're not going to ever perfectly time this. If you do, right, it's going to be off of a key level, but this wasn't a key level. So in my opinion, you're going to get really lucky here if you catch this top right here. What you want to look for is a subsequent lower high. Now, this level came right here, right? It broke down. We had a lower low, so we are now, right, if we guys take a look here, right, low a day. Now, if we take a look here, lower low, right? So now we are in a confirmed downtrend. EMA should start expanding, but what you want to look for now, if you end up missing this lower low, don't chase the lower low. That's what a lot of people do. And I said this on live too. I was looking at like flow, and a lot of people, and I saw, because I have like one side for higher institutional like premiums where people are spending 100K a position, 150K, things like that. And then I have a smaller side where I can catch bigger money trying to fly under the radar with, different orders that are like 5K, 5K, 5K that add up to those bigger orders. Or I like to just look at like what retail's doing, and a lot of retail was shorting down here, and I brought it up. I was like, dude, what are they doing? Because you don't want to do that. Like, you're shorting a lower low, but you're also going into this pre-market low. We know it's a dark pool print, but Tesla's just been a beast, guys, like in terms of its rallies off of lows and supports and sell-offs. You want to short when it's at its lower highs or like rejections off of key levels. So this was a no-no. We were looking for another lower high, and what it ended up doing is pushing up to this level here. I think Barry brought it up in chat. Great short by him. I don't know why I didn't take this. I was just had my eyes on different things. I thought Amazon had a better range that I could have gotten, but this was a nice shooting star, right? Lower high, right? This is obviously your high. This is lower than that one, so lower high. And this is where you can start to use your trend lines. I like to use trend lines on like my higher lows at time to time, and then lower highs as well, just to identify them. But yeah, very clear, right? Lower high here, sold off, and then you had another lower high here where you could have taken it. It was a very nice break of structure from this point here, just a retest of that breakdown, and then it sold off, broke structure here as well from the lows, retested it, and this is where Tesla became untradeable. I really thought this spot right here where a couple people were trying to go short. Once you see this consolidation right around this, this pre-market low, trades down. You don't want to look to go short anymore. You'd rather go long at this point. If it was going to sell off, you definitely would have seen it happen much quicker than this. You definitely had a liquidity trap here as well. But once you see this consolidation, just get out of it, right? Just look to go long, wait for a change of character where, this ends up. And when I say that, this is where you want to look for like a push up. Oh, dang it. Like a push up, higher low, and then it pushes out, right? Higher low, push up. Something like that where you get a clear higher low and you get over, I would say like right around here, this previous support, which got retested as resistance. That would be a change of character. That's what you're looking for the essentially the trend to start flipping. And you can always use your EMAs to kind of cheat and see if that trend is indeed flipping with the curl of the EMAs that everyone talks about. That will help out a ton. But right, there was definitely some opportunities on Tesla. I didn't pull the trigger on it just because I don't want to say I'm afraid of going short on Tesla, but Tesla I still feel like has a lot more juice in it that's available to get to those, like I said, those higher ranges like 233, 237. Long term, I definitely think it can push much, much higher. But yeah, that's really just evaluating what I could have done differently. Just identifying lower low, right, from this previous low here. This already signifies that we're in that downtrend. We had this cheat sheet right here that we knew that would probably trade to this dark pool, and it popped up, had a nice lower high. I don't have it on my trading view, but this was definitely VWAP right around here. So, VWAP didn't break above, lower high. You could have used our trend line for that. And really, we could have taken the short, risking this here. Or if you were a little more risk tolerant, you could have just risked the high a day, right? You could have risked like that there. I have a ton of lines now, so let's remove some of this stuff, but could have risked here for a more conservative RR trade. We still would have done really well. Or if you wanted to be more risk tolerant, you could have risked the high day. And this ended up paying out really well. It went from 229, pretty similar to where we took our short, right? But you got a lot further downside. And it traded all the way to the print, consolidated on the print, and that would have been the end of that trade. So that was it. That was all I took today. Hopefully everybody did well today. I took one miss today. I can just kind of review that really quickly. Pretty easy trade. I thought it was a good RR as well on this one. What we ended up seeing, right, was this big nasty candle. Initially the volume did not look like this. The volume was a lot less, and what it was doing is it was pushing into this 9 EMA right here. So we had 9 EMA like right around there, right? What is it, 120, 123? It was somewhere in that range. But I saw it coming down into the 9. Volume was about here, a little bit higher than these previous 2 days. But what I ended up seeing was this on the hourly. Where is it? Oh boy, it's not there anymore. So that's not good. So on the hourly, I ended up screenshotting it. I had it in the general chat. Let's see if I can rewind maybe. I don't know if it'll do it. That does not look good. No, but I swear. So I had an inverted hammer. And the inverted hammer ended up happening right where that 122.08 is. So I thought that maybe the market could have a nice reversal and it would start with some of these, mega cap names off of their EMAs, because AMD was doing the same thing. I think Nvidia was another one doing it. I don't know if it was Microsoft, but some of these bigger names ended up having essentially inverted hammers off of their 9 EMAs, and I thought that that could potentially give it a nice relief bounce or really start to change the volume in the daily candle. Unfortunately, I was wrong, but it was a pretty quick loss. I think I only took 11% on that trade. Trying to see if I can catch it. I don't think it's going to work. Yeah, I don't think it will. Hold on one second. Let me look at the Discord really quickly because I know I for sure posted it in here. I don't want to seem crazy. Uh-oh. One second. I don't want to have this video go too long. AMD Daily. There we go. Oh, that's AMD. Here we go. Yeah, so this is what I saw. Let's pull up the Discord really quick. Just so you guys can see, right? Because ideally, this is actually what the print looked like. So you had an inverted hammer at the bottom of that downtrend right around 122, 121.50. And I thought this is right here would be what reversed the market and really changed the print of that daily candle, and then that higher volume would kick in, kind of showing that bulls were trying to defend and close over the daily 9. What ended up happening was this candle right here actually ended up being one of the lower volume candles. So, ideally this candle here, this inverted, had a little bit more volume, just showing that buyers were there ready to reverse this, because this candle, the following one, ended up failing right around the top of this wick right here. So, like I said, that was a pretty easy loss. I actually ended up cutting it as soon as it broke low a day right here, the initial low a day with this black candle, for an 11% loss. But that was pretty much it. It wasn't anything crazy. And sometimes when you take those trades, you're going to have to be okay, getting a little bit of exposure on potential reversals like that. Because if you are right, like look at the hourly. This has a ton of room back up. Even if it just trades to the midpoint of that VWAP, that's a pretty big win there, even if you take like a contract or two. We were looking for 126 potentially on this reversal, like back into this range up here, right? Somewhere, if we just draw this out, somewhere like right around here. There's a ton of buy side liquidity available up here, so that's what I was looking for. You can consider this an imbalance candle as well, and even without the inverted hammer, this still looks pretty good, right? This is the 9 EMA, volume's decreasing into it. You have a doji here, so this looks like it has like the potential for a reversal. Unfortunately, like I said, things don't always play out. You have to prepare for your losses and accept that loss when it does come, because you can't control price. And even though the volume looked pretty good there, look at this volume here, and it just invalidates everything. Luckily, we closed a little bit below this, so once again, just accept the easy loss, recalibrate, make sure, if it does look good again, you can always re-enter, but don't let it get out of hand. Don't just succumb to your emotions and average down and not admit when you're wrong, because eventually, right, you will be wrong, and hopefully it's not too late, because if you're too late, you're on the bad side of a daily candle that looks like this, which is not a pretty daily candle. You're trading under your EMAs. There's not much else that's kind of holding this up. So that was pretty much it. Took one loss today, which was that Amazon trade. I had about four wins or 5 wins, all pretty big wins, 3.5% on the port today, and really just trying to close out the rest of the week strong. I think it's time to finally switch and start going back to some of these, bigger cap names. I think IWM and Growth have kind of seen, they're not their peak, but they definitely need a cool off period. They definitely caught up to what tech and some of these larger cap names had done. And I think things are going to start shifting back to the mega caps, bigger tech names, and then start to potentially reverse or at least see higher time frame pullbacks. And that's really what I'm looking at for the rest of the week. So that's going to wrap this up. Hope everybody enjoyed. We have Thursday tomorrow, so we're definitely going to be sizing down going into the end of the week. Just trade safe, protect the week's profits. So see you guys tomorrow morning.